Tata Group's consumer unit is reportedly in talks to buy at least 51% of popular Indian snack brand Haldiram's. However, Tata Consumer Products has denied any contact with the snacks brand. A spokesperson of the company said it does not comment on market speculations. Haldiram's too issued a statement to address the matter, denying any reports regarding the stake sale or engagement in any discussions with the Tata Group's consumer arm. News agency Reuters on 6 September said that although Tata was interested in the buyout, it wasn't comfortable with the proposed $10 billion valuation sought by Haldiram's and that it was a tall ask. Haldiram's started as a small sweet shop in the quaint city of Bikaner in Rajasthan. Over the years, it catapulted to become one of the most popular local brands in the country in sweets and savories. According to reports, the snack giant has almost 13% share of India's $6.2 billion snack market. It has garnered overseas popularity too, with products sold in over 80 countries. Considering Haldiram's popularity in India and overseas, is the demand for a $10 billion valuation a fair ask?
Let me give you a small bit of perspective. Bikaji Foods is Haldiram's smaller rival. It is listed on stock exchanges. Its market cap, which is the total of the value of its shares, is about $1.5 billion. That is 6 times its annualized revenue. According to available reports, Haldiram's revenue in 2021-22 was close to $1 billion, 6 times that. If we use the same parameter as Bikaji, will be $6 billion. However, according to unconfirmed reports, Haldiram's current revenue is closer to $1.5 billion. 6 times that will be $9 billion. Now, let me hasten to add that in a deal like this, there are things involved which go beyond simple mathematical calculation. Let me also add that Tata Consumer shares rose when Reuters first reported a possible deal, and they fell when the deal was denied. I will leave you to munch on it. Have some bhujia.
Meanwhile, Tata Consumer Products has a strong foothold in the beverage segment and owns brands like Tata Tea and Tetley. It is the world's second largest manufacturer and distributor of tea. The company also has a joint venture with Starbucks to own and operate Starbucks cafes in India. Tata's consumer unit is relatively a small part of the Tata Group in terms of annual turnover. At the 60th AGM of the company in June, Tata Sons chairman N. Chandrasekaran expressed his intention of expanding the consumer arms business across new categories and making it into a complete FMCG company is in the works. So what would an acquisition of a majority stake in Haldiram's mean for the Tata Group?
In terms of what it will do for TCPL is it will give them a very, very strong presence, almost like a leadership role from nowhere in the savory snacks market, which is large, which is growing. And the organized market share within that grows tremendously. That's a big plus. 2 is, I think it will bring a lot of synergies for TCPL across their portfolio, given that they are in beverages, they are in water, they also have the ownership of the Starbucks franchise in India. I think it brings a lot of synergies to play. So it can have a huge multiplier effect.
Tata Consumer Products' pursuit of organic and inorganic growth strategies is aimed at ramping up its presence in the food and beverage space and for competing directly with Pepsi and Reliance Retail. The predominant impression about the conglomerate's FMCG arm is that it is a tea company. In light of its larger goal to identify as an FMCG giant, Tata's rationale behind the reported purchase seems plausible, especially after its recent unsuccessful attempt to acquire Bisleri.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.
He's making his investments talk. Business Standard.